Today, the door to law is going digital as we have a very special guest with us currently in California, Heather Henyon. Heather is the founding general partner of Mindshift Capital, which is a women-run venture firm investing in women-led companies. There are too many accomplishments really to name Heather, but some of them include closing, I think, more than 20 microfinance debt transactions, totaling around $47 million in 7 countries, and also setting up the first women's angel investor group in the Middle East. Heather, welcome.
Thank you, Danya. Thank you for having me.
Yeah, it's lovely to have you here as well. Thank you for joining. So we know that you're very passionate about investing in women. So I'm going to go straight to the first question and talk about the kind of the gender gap in venture capital, because there is a significant gap. Some data I think released last year, according to TechCrunch, for example, I think it was only 2.8% I think of funding went to startups in the US, and then we also had some data in the MENA region from Magnet, which suggested it was slightly higher with 5.1% of funding going to startups here. But even so, not really good enough. So I'm just wondering, in your view, what do you think are the key underlying reasons for the gender disparity problem?
Yeah, no, it's a good question, and it's a big driver of why we set up Mindshift Capital. So we've looked at a lot of the data, and just from our own experiences, I've invested in now over 100 early stage tech companies across the US, Middle East, and Europe, and through various angel groups, but also directly myself. And 60% of my portfolio is women-led, so has at least one female founder who's also in the management team, which is the gender lens that we've used for both Wayne, the Women's Angel Investor Network, and also for Mindshift Capital. So I think there are a few things that are happening. One is just network theory. So a lot of the venture capital funds tend to be run by male partners. In the US, only about, I think, less than 10% of the partners now are women. Okay. In MENA, it's even less. So I mean, there are maybe 3 of us in the whole. So I mean, it's a smaller ecosystem than the US, but still, it's pretty small. So, and we know that we invest in people who are like us because we relate to them, and then also I think for women, we get the kinds of products that women founders tend to build. So obviously, women are more comfortable talking about things like breast pumps and education and some of the things that are more relevant to our lives than some of the male VC partners. So I think, and just even some of the data points, for example, if a female founder approaches a venture capital fund that has at least one female partner, she's 3 times as likely to get funding. So yeah. I think that's a big part of it. I mean, there's, obviously unconscious bias, and then just different networks that we're part of.
Yeah, which is actually, I was going to come on to that. So you mentioned that, obviously we do tend to invest in people that are similar to us. So before we come on to unconscious bias, I just want to talk about pattern matching first of all, which I think is a lot more intentional than unconscious bias, because it's really kind of looking at founders and looking at a team and trying to match them to a pattern that's been seen before. So for example, the typical kind of white male college dropout, maybe, as we saw, with Mark Zuckerberg, from Facebook. So I just wanted to know, because some people argue that, this is a good practice, it leads to successful investment decisions. Others argue that it leads more towards bias against women and minorities as well. What's your view on pattern matching?
Yeah, no, I think it's a big issue. So, and I think that's a big reason why women have been left out of the whole funding industry for so long. So, I mean, even this company that we just recently invested in, Shiok Meats, based in Singapore, with 2 female founders, 2 stem cell scientists. One is Indian, the other one is Singaporean. I talked to some of the other investors when we were doing our due diligence, who are, a couple of them are Silicon Valley based. And if you look at the amount of capital this company has raised, it's a aquaculture, clean seafood company. So maybe a comparable like Memphis Meats, who's done now, they're on their Series E funding round. They've raised $200 million of capital.
Wow.
They've been around for years, but again, white male founder based in the US. So the Shiok has probably raised now close to $7 million. They've been around for a few years. They're just doing their Series A now. And I know that capital raising isn't as easy as it should have been. So I think that there's a big correlation between them not raising capital and then just they don't match the patterns that are the typical sort of, like you say, the white male hoodie, like young entrepreneur. And also, I mean, a lot of the evidence shows that some of the more successful companies and founders are actually ones that have experience. So even, some of the data showing that founders who are 40 and older generally, build and run more successful businesses. And I think especially now in this sort of post-COVID environment where we're looking at, companies that are really sustainable financially, that are on a path to profitability and not just growth at any cost, where they just continue to raise capital kind of ad nauseum. I think that will be a big shift that we'll start to see as well. I mean, even some of the more mainstream VCs are now talking about this. So they're also aware that it's not, things are changing.
Yeah, absolutely. And again, just to touch upon unconscious bias, which is slightly different from pattern matching. It's slightly less intentional, but because some of us are not even aware that we do have them. I'm just wondering, as your role as an investor, are you ever aware of your unconscious biases, and have you adopted any strategies to try to kind of avoid them, I guess, or overcome them?
Mm-hmm. Yeah, no, it's really interesting because all of us have unconscious biases. It's really a matter of figuring out what they are and how to kind of become, one, aware of them, and then two, ways to manage around them. So actually one of the data points when I first had the idea of Mindship Capital was a lunchtime keynote that was given at the Angel Capital Association in San Francisco a few years ago by Mitch and Preeta Kapoor. They're a fund. Mitch was the founder of Lotus Notes, had a big exit to IBM. They used the proceeds to set up Kapoor Capital, which is one of the largest funds in Silicon Valley, targeting underrepresented founders. So they gave a keynote, and one of the data points was around basically the study that was shown in Harvard Business Review, where there was a pitch competition. You've probably seen it; it's been around a little bit, but but basically that the female founders were asked negative questions. So instead of, and the male founders were asked very positive bias questions. So tell us about your success and what's your plan going forward. Whereas, for the women, it was like, why are you losing so much money? Or, burning capital or, but what was interesting, and they did voiceovers, so the judges didn't actually know what gender they were. But what was interesting is the women judges as well were very biased against the female founders. So that was when I kind of had this aha moment and thought, just because we are women doesn't mean that we're actually not biased and don't have these unconscious biases. And I started to think about even my own investment experience and just become more aware when interacting with founders. Am I asking women harder questions? Am I harder on them? Do I just kind of accept what some of the guys tell me without really trying to validate it and improve it? So it's really interesting because there's so many assumptions made based on how we look, but actually it's so much deeper than that. When you look at two sons, an 8-year-old and a 10-year-old, and just the influence, and apparently we're fully socialized by age 11. So when you think about just all of these perceptions about gender, race, just age even, all these things are formed by age 11, which is just crazy. So the influence that schools play, the media plays, all of these things that aren't necessarily in our control within our own homes even. Gender roles are massive. So I grew up in a family where my mom was a math teacher, but she took 10 years off to raise me and my brother. And I think, that definitely affected how I viewed women, because my dad was the financial breadwinner. My mom made less money, but she probably worked much harder than him. She also had all the kind of the home, work that she was doing in the home with me and my brother, and then just the household. So I think it's something we need to think about, is just because we represent that gender or that background or that race, it doesn't mean that we're actually don't have those biases. A lot of it's really how we're raised and what the stereotypes are that we're part of as children.
Yeah, that's a really interesting point as well, especially coming from you, right? Because you're very much supportive of women, and yet you acknowledge that even so, there may be kind of unconscious biases there as a result of your background or your upbringing, and especially now we're all consuming so much media, 24/7. There are kind of, even now, our ideas, our beliefs are being impacted. So definitely, it's worth, I think, investors trying to become more aware of that and taking more conscious decisions. So for any startups that may be watching this and you're an investor, I'm sure they're interested to know, what kind of criteria do you look for when you are looking to invest in startups?
Mm-hmm. So our fund thesis is really built around what we call the rise of the Zillennial. So new global consumer values that are based on areas like sustainability, diversity and inclusion, equality, and we see that just from like the Greta Thunbergs of the world, the newer generation, so Gen Z and Millennial, and these generations are also just ubiquitous. They're always connected via Wi-Fi. And this was all pre-COVID, but now I think post-COVID it's even more apparent. We're connected 24/7 virtually. We kind of like live in this very screen-driven world now, because we're not interacting as much in person. And we've also just seen these big shifts in these industries. So the target sectors for us are food tech, fintech, ed tech, and health tech. And the other reason for that is we see more female founders in those sectors. We think those are the ones that are changing fastest, and that's where the disruption is. But we just think also, women gravitate towards some of those sectors because they experience those pain points more directly than perhaps men. And also, just to be clear, I think of our 7 companies now, 4 of them are mixed gender teams. So we do like to look at gender diverse teams as well. I mean, that's a big part of it. The others are all female founder teams, but we're not investing in all women teams, and that's not our focus. It's really about having one female founder who's part of the team and actively engaged in the business operationally. But I think the other things, we're looking for the same things that other VCs look for. So obviously, team is a big part of it. We're early stage investors, so we invest at kind of, I would say our sweet spot would be the bridge between seed and Series A. So usually, especially female founders don't raise enough capital at seed to get to the milestones to raise the Series A round. So they then need to raise another round in between. But we see this a lot, everywhere, I think, especially in markets like MENA, where there's just not enough capital going to those rounds, unfortunately. And we also do Series A rounds. We have done a couple seed rounds when we know that will help us to get into the next rounds. We can either lead a Series A in a market that we know very well, or like MENA or the US, or even be able to just at least exercise pro rata rights to come in as follow-on investors. But I mean, I think the key things for us: great team. So ideally more than one founder. Although we don't rule out single founders, because we know that there are also great companies that are started by solo founders, and as long as they mitigate that risk by having other key people on the team, and then just scalability, big market problems. So if a founder is only focused on a very niche small market, we're probably not going to be as interested. But if they're looking at, for example, something very relevant that is global and might be a local solution but could be scaled into multiple markets, we're very interested in that.
Okay, so main focus team, scalability, and also certain industries like fintech, ed tech, and so on. So I want to just touch upon fintech there, because I noticed, I follow you on Twitter, and on your Twitter profile you do mention that you're a fintech aficionado. So I was just wondering, in terms of just going back again to this the gender gap, crowdfunding sometimes has been viewed as a possible solution to the gender disparity problem. How effective do you think crowdfunding is in this context?
Yeah, no, I think it's very effective. So I worked with Eureka, a crowd investing platform based out of Dubai, but global, a few years ago. And yeah, and I was really shocked to see that 60% of the companies that received funding were actually women-led, which is, I mean, the other points, right? 2.2%, 5%.
Yeah.
There's just a massive gap. So I think it's a great equalizer when you look at crowdfunding, and basically it removes some of the other biases that we see, and then also just some of the unfair advantages that male founders might have. So just things like some of the informal networking that we know women don't like as much, the evening drinks or whatever. So if you're kind of all on a platform and that's the access, the way to showcase and highlight female founders and hopefully remove part of that gap.
And I've read a little bit about crowdfunding, and I was aware that it does have this potential, but I didn't realize that it was 60%. That's a huge difference between what we're seeing outside of crowdfunding. So yeah, really interesting point there. And aside from crowdfunding, do you think there are any other possible solutions, whether it's things that female founders themselves can do specifically as well to maximize their ability to get funding?
I think networking is just really, really critical and something that maybe women don't do as naturally. So really reaching out, building relationships. I mean, it would be probably advice for most founders, because I see a lot of founders all of a sudden decide they've got to raise money and then give themselves too short a time period to do it, and then they go to investors when they want capital, but they haven't invested in the relationship. And I guess the longer that I spend in this business, I've been in venture investing now for 7 years, and the more I just become reminded of the fact that this really is a long-term people business, relationship business. It's really difficult to shortcut certain things. So the more, when I look at even some of the companies that we've just invested in recently, I mean, they're companies and people who I've been tracking and seeing in different situations over the last, 1 to 2 years. So it's not like someone comes, says, here's my deck, and then, a couple of weeks later we take it to our IC and invest. And I think for women, it's just, our business networks tend to not be as strong for lots of different reasons. And I see that happening now. I just saw a data point today, Rethink Impact, which is now the largest venture capital funds focused on female founders in the US. They just closed $182 million fund. It was their second fund. So they're managing now $300 million in AUM. And they said that the funding going to women-led companies is down by 40%. This past quarter compared to last quarter. Of course, this is US data, but I assume it's probably the same everywhere. So I think women now, especially that we're in this virtual world and kind of leveraging our existing relationships and maybe not building as many new relationships because of all the restrictions, women just have to work extra hard to just keep out there and keep re-engaging and maybe asking for a referral. So going to someone they know who's an investor and say, hey, could you introduce me to another investor, or could you connect me with this person? Because those kinds of warm intros is kind of what helps you to build those relationships and get the access that we all need.
Yeah, and definitely more effective than just sending around cold emails to investors you don't know asking for funding, right? So definitely focus on relationships there. So finally, Heather, again, just staying, I guess, on the topic of fintech, I wanted to talk very briefly about the gender gap in financial inclusion, because fintech sometimes can be viewed as a way of gaining access to more affordable, more efficient financial services and products. And I was wondering what your view is on this, and how do you think fintech can be used as a way to support financial inclusion? How can it be fully leveraged, I guess?
Mm-hmm. Yeah, no, it's a really important question. I worked in microfinance in the region for 10 years and started Grameen Jamil, which is a regional microfinance company, and also worked on mobile money as well. And a big part of that is, banking the unbanked. So creating inclusion for people who don't have it. And there's a massive problem across the MENA region in this respect. Only 10% of demand is actually being met by current providers. So there are some solutions that have come into play, but I think what we saw a lot in microfinance was that 80% of the borrowers were women. And a lot of people always think microfinance is really targeting women because it's women's empowerment and it's charity driven or foundations or, philanthropy. But actually it's because women have a much higher rate of repayment. So Professor Muhammad Yunus from Bangladesh, from Grameen Bank, when he started microfinance in the 1970s, he found that just in his own village in Chittagong that 60% of the repayment rates were from men, and women it was like 99%. So it was big. So it's like, which one, what makes more sense? So a lot of it is actually very commercially driven, and I see this so much in VC as well. And when I look at, what's his name, O'Leary from Shark Tank, he always talks about, he's targeting all women founders and women-led companies, not because he's a feminist, but because he basically wants to make more money. And he said that the women-led companies just outperform financially. So it's also, that's part of what we're leveraging as well with Mindshift. So I think there's a massive opportunity with the financial inclusion. There's some great companies that have been addressing this. Now Money is actually one of our Wayne portfolio companies. They Rise, you might know, also started by Padmini. So she's also focusing on this, and a lot of it really is around, maybe not around gender, but around income and socioeconomic disparities. So targeting the unbanked who don't have access to financial services. But I think for women, there will be more and more. So far, unfortunately, a lot of these products haven't taken off in terms of gender. But I think there are lots of opportunities, maybe even around things like robo-advisors and targeting women investors. So Sally Krawcheck in the US has been focused on this with Elevate, and her Elevest is her fund focused on increasing access to finance and savings for women. But I think there are actually there's much more that could be done. But we do see, surprisingly, a lot of people don't expect this, but just even out of the US, some of the Fintech competitions that I've been part of as a judge, and I'm part of Village Capital has one right now, and then so does The Mix, which is now openly seeking applications actually for financial inclusion startups from MENA. So if you Google that, you'll find that for companies that are interested. But basically, we do actually find a lot of female founders in that space, which is not what people expect. But I think, again, women are partly drawn to impact, and women, compared to men, tend to be more purpose-driven. If you look at some of these archetypes around, masculine and feminine archetypes, so they just naturally like this stuff more and just tend to be more engaged in it. But there's a big opportunity, and I'd like to see more focus on it going forward.
Yeah, fingers crossed we do see more of that. Heather, I want to say thank you very much. That was really insightful discussion. I've learned a few facts myself. I really hope the next time we do have the opportunity to speak that there has been some improvement, I guess, just overall in terms of the statistics where we see more female founders. But thank you very much for joining today. I really appreciate it.
Yeah, thanks so much, Tanya, for the opportunity. Stay safe and stay sane, and look forward to more in-person interaction, hopefully in the coming year.
Yeah, fingers crossed we can actually meet up in Dubai. Thank you as well to everybody watching, and I hope you enjoyed it.